Welcome back to the now seemingly world famous US Bank Lounge here at the Money 2020 event in Las Vegas. This is the next in the series we are calling The Future of Finance. And today we have with us from left to the right, we've got Mike Jorgensen. You might have seen him in one of our others. He's head of emerging solutions and embedded payments with US Bank. Thanks for coming back.
Thank you.
Fred Joquette, Chief Operating Officer at Rain. And then we have Jim Felice, Head of Money Movement for Visa Direct. Thank you all for being here. Thanks for joining us in the booth on the floor here in Las Vegas. First of all, I want to start off with something that we didn't even talk about in our prep for this. When it comes to organizations like yours, when you come to this, what's one thing you hope to get out of these visits?
Yeah, for me, it's I really want to get what everyone wants to get out of it, right? Which is building awareness, building the fact that we have partners in this ecosystem, like US Bank, like Rain, whose goals are to actually improve the lives of the everyday citizen. And so I think what we want to do is continue to evangelize the fact that, there are real solutions for customers and clients that want to innovate on behalf of consumers.
And what's the objective for Rain?
It's a lot simpler, but all our partners are here. It's just a great way to meet everyone over the course of a weekend.
Are you having to level set it all on we talked earlier about earned wage access, EWA, and I was thinking, on demand, you said on demand pay, which, synonyms, but, what does this mean? What's it mean for an organization like yours to deliver on that? How have you been doing that?
Yeah, I think it's evolved a lot over the last, 5 years, really. But on-demand pay used to be a point solution. And when we first started talking to employers, the conversation, in 2020 was, what is this? What is this? Why do I need it? Now the conversation is very much, I know what this is. I understand why I need it. Why are you differentiated? Why are you able to offer on-demand pay better than, the 3 or 4 other providers that are out there? And so the conversation has evolved a lot. And employers ask really 2 questions. They ask, what can you do for me as the employer? And what can you do for my employees as well?
And what is it, as you go and look at the end users, what kind of feedback do you get from the new mechanisms that you're providing in this channel?
Yeah, so the average employee that we serve is living paycheck to paycheck, which is a lot of households in the US, right? Upwards of 50% of households are living paycheck to paycheck. And so when they first come to Rain, it's always, hey, I need my money, I need it now. And please help me get my money. And it's always or the majority of the time for daily necessities. So gas, groceries, bill payment. That's the type of use case that we're solving. But over time, as they use Rain, they save fees. They're saving a lot just by not having an overdraft fee, not resorting to payday loans. And so over time, these users now are coming to us, and that's what we're trying to solve next is, how else can we work together? What else can we build? Can you help me save? Can you help me build my credit? Can you help me access new credit instruments that I wasn't able to access before? And so this is how the evolution of on-demand pay, at least on the employee side, is going.
And that gets to what you were saying before, kind of this democratization, or at least the financial inclusion, being able to help people live their lives better, faster, more efficiently. That ties into where you all are.
Yeah, we know that as, employees that are financially well and don't have the financial stress of, where am I going to get my money to pay the next bill, or, suddenly an urgent $400 payment comes up for something that's happened. The majority of consumers can't afford a $400 payment in between paychecks. And so we fundamentally believe that services like Rain provides creates that financial wellness, the financial security, which then not only improves the employee benefit, but also the employer. Now, because now the employer has a much healthier employee, an employee that's motivated to show up for work. We've seen this early in the pandemic where rideshare were early to adopt faster payouts. And the reason they did that is because they wanted to attract drivers. And they thought that was the first sort of idea around attracting drivers. But what they found was they had very much a competitive advantage because the drivers would show up more often. And there's choice today on where people work, on where they, choose to spend their time. And they're obviously going to spend their time with the employer that gives them the benefit that they surely need.
So coming back over to you, Mike, what's the role? Because a lot of people may not understand the architecture, the process, the partnerships involved in activating and streamlining for these emergent jobs that people have, especially when we think about right before and right after pandemic. How does U.S. Bank play a role in that? Right? Can you explain that a little bit?
So there's nothing more important in life for an employee than getting paid and then being able to make payments, right? That's the two things that you do more often than not. I got to pay my bills and I got to have a way to do it. Both Visa and Rain are great partners for us because they create an ecosystem where we can easily interact with these employees and make sure that life is better. We become the payments. We become the embedded layer of money movement that's invisible and just simply makes the payments work. That's the value proposition we want to bring to a table. We want to be a bank and do what we do really well. And we love that Visa and Rain do their parts of it and make sure that we have ways to get money out to cards and accounts and right into a consumer's hands.
Then from your side, how do you see that tying in with a bank like this, with like U.S. Bank? How does that ease operations on your side? How does that ease and facilitation of ultimately getting people paid?
Yeah, so I mean, as we've scaled, and it's kind of crazy to say now, we do 1 transaction per second. So every second, there's a user taking an on-demand payment from Rain. And as we've scaled, I think stability has become the most important thing for us. Because if ultimately, you're offering a service and the user's coming to your platform and they can't access their money in a time of need, that creates stress. And then it creates problems for the employers. The employer will complain to the employer will then complain to us, right? So you need to offer a service that works, and it has to work 99.9999% of the time. And so working with Visa and with US Bank, right, the reason we chose those partners is just stability. We need to know that we're going to be able to deliver on-demand pay all the time and that it's scalable. And so, I think the partnership here is exciting because we can't do that. We can trust our partners to do that.
So this is a little bit more operational, Jim, as to the role Visa plays in all that. But I would also like to know, as you built the partnerships, where did you have to adjust fire to make sure that things fit smoothly and that they did operate in conjunction with each other?
Yeah, I think it's interesting that stability and assurance and trust is sort of part of how you scale. And when we first start and you think about faster money movement, the first thing everyone thinks about is just speed. You need to get into that bank account right away. And what we found over the years is while that's important, it's actually not the main piece of the puzzle. What matters is your reach, your ability to make it accessible to everyone. So at Visa Direct, we reach every bank account in the U.S. You can get to every single bank account in the U.S., and we have 11 billion endpoints around the world that we also reach. So we're both domestic and global. And so you have that ubiquity so that it does work every time. But aside from just the reach, there's also the trust and security, all of the fraud tools that have been built over the decades of what's protected our card transactions now protect money movement. And that's very unique to our network and our scale. And then lastly, it is all about convenience. As Fred pointed out, you bring someone all the way to your app and to your experience, and they're ready to, go ahead and use your service, only to find out it doesn't work. I mean, that's the last thing you want. And so our focus is around, the reach, the security, of course, speed, but also the convenience of the fact that it's going to work the first time, every time.
How are you getting feedback? I mean, based on that, the reach, and you want people to know, okay, it worked. How do you get the feedback to know that it's operating the way you want? And importantly, then, how are you building momentum so that the next enterprise hears about the mechanisms that you've got? And they say, oh my God, we keep hearing about this other way that people get paid. The people we've hired on are saying, hey, do you have this particular application so that we get paid in real time? How do you, are other people carrying the water for you because of the success that you're having? Or how do you do that to ensure the next enterprise can take this up?
Yeah, I think HR professionals all talk, payroll professionals all talk. And like I said, at this point, they all know about on-demand pay. I think you'd be hard pressed to find a payroll professional today in the US that does not know what on-demand pay is. I think there's still, though, at least from our perspective, there's still a big misconception about why employees use on-demand pay and whether or not it's actually good for them. And I think our job, right, is to take, you talk about carrying the water. We have all these amazing user stories. These employees, we talk to them every single day, right? Whether we're talking to them through the app or they're calling us, and they tell us exactly what happened and why they use that. We even have a reason for cash out on the app, which we share back to the employers. Turns out employers really care about knowing why their employees use that. And so I think the next step in being able to convince a lot of employers is not a question of, is on-demand pay something that is scalable in the US? But now it's a question of, is this actually good for my employees? And highlighting those stories is going to get more and more important. But I don't think we're at a place now. I still think the majority of employers, if I had to guess, probably still think, I don't know, do my employees really need this? Is this actually good for them? Or are they going to use this to, do sports betting or something, which is not the case. But
I agree with you. And actually, it's really interesting to look at some of the companies out there that are looking for the on-demand pay. They sometimes look at this as being, traditionally, people can wait for their paychecks. Why do we have to do this? They don't realize that it's actually an employee retention and satisfaction play. If you have a happy employee that doesn't feel stressed, they come to work better, right? This is a great solution to do that. And see, this is one of those examples. In the traditional, days of a bank, everybody would have to go to the bank to have an experience with them. Now we're trying to take the bank experience to the consumers in a different way. And it's not through the bank, it's through Visa, it's through Rain, and how we work through them to be able to affect change in these communities.
Yeah. This is almost like, now that you've got this collaboration, it's working, it's paying off, it's paying out. The idea here is it's kind of like a band. Everyone wants to keep pushing forward too and find new innovative elements of their piece of it. It's kind of like a band that says, hey, who's bringing the next song for us to be able to do? How did the three enterprises then work with each other when it comes to how do we innovate what we've got going on? We need a little bit more from the Visa side, or Rain's going to be adjusting, or maybe it's something that US Bank's been using in another channel they think can work here. How do you balance that out? How do you, as a relationship, as collaboration?
Yeah, I mean, for us, as we grow the number of products, we were just talking about this before, right? We have a lot of employers now that are looking for one-time payments for their employees. How can we do that? Leveraging the FBO accounts with US Bank, and then push to card with Visa. Credit instruments, right? Okay, so these employees now are looking for new credit instruments, or their first-time credit instruments. How can we leverage our network? How can we leverage what Visa's built and the rails that you guys have built already to build more robust credit instruments for those employees? So I think, and that's what's great for Rain, at least partnering with two major players that have a lot of different tools available, is, understanding and exploring how we can actually leverage those additional tools that you guys offer to continue to better serve our employees.
Yeah, I mean, we come at it from just our breadth of experience and working with a variety of partners. And we've had the benefit of seeing what works and maybe what doesn't work at times. And so when we're working with each of our partners, we meet regularly with Mike's team, and we're always bringing up, what is the next, thing that people are looking at. Mike's team's always telling us what's working and what's not working, and we solve for that. And obviously working directly with Rain gives us that knowledge of, where do we go from here? And one good example of that is we've, recently done some research, and we know that EWA, or on-demand pay workers that accept on-demand pay, have a higher propensity to send money back home, send digital remittances. And we're seeing players start to dabble in that space where they're also trying to serve not only the on-demand pay portion, but by the way, maybe you're taking that on-demand pay because you need to send money back home to a brother or mother who may need, medical care, et cetera. And so how do you build the services that you offer in a way that better serves that individual, at the consumer level?
As each of you look at this particular opportunity, who do you have to sell this to more? Is it HR, or is it the chief technology tech officer, the chief information security officer? Who's the decider here when it comes to this kind of a platform?
So the head of benefits, head of HR, usually is the main decider. The main detractor is usually the head of payroll. That's right. And it's not because they don't believe in it, but it's just, it's hard to sell them. Getting paid for a business and for employees is probably the most important thing. You have to pay your employees. If you don't pay your employees, everything else crumbles. And introducing sometimes a new variable into the payroll process is a little tougher. But the main proponent for this today is definitely the head of HR. They see the benefit. And on-demand pay is the highest used benefit in the history of benefits. When we, go to an employer, there's no other benefit that is more highly used. And then you talk about showing up to work. The average employee, the average employee that uses RAIN works 20 hours more per month than the employee that does not use RAIN. And it's not because they're taking on extra shifts. It's literally just because they're showing up. They're showing up to work. Because if you're living paycheck to paycheck and you need cash today and your employer is not going to pay you, you're going to go work for Uber or DoorDash, or you're going to go work for your cousin that's going to pay you, $200 cash for that day.
And just to give you a sense of scale, EWA, aside from P2P on our network, and we do, over 10 billion transactions a year, the EWA use case is the number one use case on our network today.
How are you taking this? How does this extrapolate into other areas of what Visa is doing? Do you see, we've gotten this type of work done, we've platformed, we've worked with the HR groups this way. What does this mean for where else Visa goes?
I think if we look at the evolution of real-time payments and the volume that we've been doing on our network, we've seen it evolve. It started off with the fintech player, the P2P player, moving into gig and gig worker, rideshare, EWA. And what we're now starting to see is, these fintech players have now set the customer expectation. Now everything needs to move fast. I have a 16-year-old son at home, and for the last 5-6 years that he's been trying to, dabble in his own financial services experience, I could tell you he's not happy at all with the way, money moves for him, and understanding that he has to wait a few days before it moves into his platform. He's actively trading with me, of course, but he's wondering why he has to wait a few days before he gets his birthday money in his account so that he can, make a trade. So what we're seeing is customer expectation of faster money movement is not on its way. It is here. And so we're now looking at, where else does this go? You're waiting for an insurance payout. You're not waiting for the check in the mail anymore. You certainly don't want to. You want that money in your bank account where you can in fact use it because you have a roof to fix. And so that expectation now is becoming table stakes, and we're seeing the entire industry move in this way. And we think, we hope that we're positioned well with partners, like US Bank, to be able to go capitalize on that opportunity and ultimately deliver better experiences for the consumers.
And are you seeing, where you can take this and where you're taking it outside also? Hey, birthday money is important. Let's not underplay the $5 getting into for the 5-year-old to get over to their bank account.
$5 was so yesterday.
Yeah, I know.
That's like
I'm sending my kid Bitcoin. But what is it from the U.S. Bank perspective then of how you replicate or how you borrow the good ideas into other areas?
Well, so it's just like what Jim was saying. We saw this start in very small little kind of niche use cases, and now we're starting to see full industries light up. So Jim mentioned insurance. I've got an insurance check sitting at home on my desk. I still don't know what to do with, and I got to have a repair at my house. I just wanted my account. I have to take to the bank now. Those are things that we're actively working with fintech providers in the insurance space to solve. That's in healthcare. You see some other payment rails that are happening there. The one that's really interesting to me is title. Think about when you go and close for a house or a condo. Those title transactions don't need to take the time they do, and there can be an embedded experience that we're bringing to the table with those providers. So, there's many, many other use cases that I see out there that will start to turn on industry by industry. It's all about who's creating an ecosystem that solves a consumer need, just like Rain did. Now, how do you make sure you plug into that and bring embedded payments to that whole ecosystem?
I think there might be a little difference here in what I want to know in this next question, because of the idea of the paycheck to paycheck workers that do benefit from this. Is there a responsibility or is there a need from your sides, any of your sides, but I'm looking at you two particularly, about educating more, about getting people more educated for as they start asking for this to be a piece of the puzzle because of the straits they might find themselves in?
Education is an interesting point. What we see a lot of times is when you try to drive education at a point of desperation, which oftentimes when you're living paycheck to paycheck and you're coming for a cash advance, it just doesn't resonate with the consumer because they're just like, look, I hear you. I just need my money. Leave me alone. And so to get them to a place where they can actually listen to the education tool and actually take action, you really need to get them to a place where they have a buffer, right? Where they have a few $100s saved, or ideally, maybe even $1,000 saved. But once they do, once you get them off that, what we call the financial cliff, once you get them off the financial cliff, it actually snowballs very quickly, because then it's like, hey, I see now that like there's more money in my account because of these like small actions that I took. What else can I do? But it's really tough to drive the education at day one. So for us, our goal is really help them make sure that the on-demand pay works. Then you ping them on the side and you say, hey, by the way, how about rounding up your next transaction? And you just put $10 aside. And you do that for, a couple months. Now all of a sudden you've got a few $100s. And then that's when the education really kicks in. But it's hard. It's really hard to drive education in the early days.
Jim?
Yeah, I mean, at Visa, financial inclusivity, moving people into the digital payment realm is something we do as a network around the world. And we fundamentally believe that earned wage access on-demand pay for those partners like Rain who are doing it the right way are providing that financial stability and wellness to their consumers is really important. And so we want to continue to help and support clients like Rain that are out there doing it right. Payday loans, can be a challenge out there for many people, and they tend to resort to it out of desperation. The reality is when you have a bill to pay, you'll find a way to pay it. Your family depends on it. You need to put money on the table. The alternatives are not as great as being able to have access to on-demand pay. And that's where we would really like people to focus. And we think that this should just become the norm. I hope when my son's working, and I know we talk about, certain segments of the population, but the reality is our research says that 62% of people live paycheck to paycheck. So I think every organization, I'm sure, including ours, has individuals in it that could probably use that extra little bit of pay between their 2-week pay cycle. I think that's not something that's reserved to just quick serve restaurants or, the coffee shop on the corner. I think it's actually everyone.
So, I mean, just think about that. The majority of people walking around today are living paycheck to paycheck, right? Well over 50%. We agree with statistics that are over 60% saying that that's happening. It's amazing to me that that's what's going on, but yet you have companies and you have systems in the financial world that haven't caught up to what that means. And I'll give you an example. We had a restaurant chain that came to us and said, hey, we have a really big problem. Oh, what's your problem? Well, at the end of the night, we need to be able to divvy out tips to everybody because they need to go home and pay their bills. And guess what? With everybody paying for meals with credit cards now, there's no tips left. Like, we need a solution to be able to get money into the hands of our servers. How do we do that? That's one of the ways that in this use case, in this situation, you have to figure out how to cater to those employees and workers. They're the ones literally carrying food to tables, but you can't pay them at the end of the night when they need to have their money. This is a great use case and application where I think we're starting to see employers and the financial systems evolve so that just like my kids are the same way. They're like, Dad, you mean you have to wait a weekend or a holiday for money to move? Like, I want it now, right? That doesn't happen in the breadth that we would like to see, but it's changing very quickly.
Let's just look forward for the next 12 to 18 months. Each of you, let's close this out with a trend line in corporate payments, trend line that you are seeing or that you're anticipating. Mike?
Yeah, so really interesting trend line, I think, really continues down this path. You saw rideshare, you mentioned, Jim, was like where this all started, this little seedling. You're going to see this go into many different institutions, and I think there's going to be 3 different models. There's going to be a model where it says, how can I as a company come in and I can take your payments and put them into my ecosystem? So it's a pull type mentality. There's going to be, how do I have an embedded payment direct, which is what we're doing with Fred and Rain, where we say our payments are directly where you need them to be and part of your ecosystem. And then he also mentioned the FBO model, a for benefit of, how do I move money on behalf of people that don't want to get into money transmitter licenses and be an MSB, but they want to rely on a bank to do that? That's really where this embedded payments path starts to go. Partners like Visa and Rain are demonstrating how we get there and how we do it together.
From Rain's perspective, as we grow from, what was a point solution to more of a platform, we have a lot of different products that continue to help on the income smoothing side of things. But the whole other side of the equation is expense, right? You're using the money to pay expenses. And the truth is on-demand pay helps with a lot of expenses. It does not help with your large recurring expenses. And so we're really excited with Rain to start looking at that other side of the equation and say, hey, given the, the position that we have in your wallet, what can we help, or what can we do to help manage the expense side of your balance sheet?
And how about you, Jim?
Yeah, I think for us, the future of payments is global, it's accessible, it's trusted, it's secure. That's where we focus. We focus our time in making sure that the network is robust and can deliver all the tools, the capabilities, like the reach, like the convenience, like the speed and the security, so that clients like Rain and support with US Bank can actually deliver those innovative solutions on our rails to make sure that they work all the time. So we're spending our time focused on, I would say maybe some of the hard stuff of making sure everything works all the time, ensuring that we're compliant, ensuring that, there's not a lot of fraud in the system, et cetera, making sure we have that reach so that clients like Rain can serve their clients anywhere they are. That's our focus.
Jim Felice with Visa Direct, Fred Choquette with Rain, Mike Jorgensen joining us again from US Bank. Thank you all for being a part of this.
Thank you.
Thank you.
All right, we're going to have more down the line. The Future of Finance series from the US Bank Lounge here at Money 2020 in Las Vegas. I'm Steve Johnson. Come back again.